Hello, everyone. I said in Atlantic City last week, and I say it again today, where's the money? Where's the money? Is there any money out there? So, look, join me. Okay, that's good. We got one pocket full of money. I'm sure you join me in the great disappointment about lack of banking and lack of institutional capital. I was a 25-year institutional investor in tech before this zany, crazy sector, and those were our partners. We couldn't live without institutional capital and banking. So I'm disappointed, but I actually choose to believe that we are still on our way to a $100 billion opportunity by 2030. Yes, let's make that happen, right? Yes, we want that. And I'm viewing this as merely a temporary malfunction. How's that? But here are four knowledgeable people who are finding the money, serving investors, licensed people, banks, showing people how to do compliance. So let's hear from them. And one of the main issues is, how are you fit for getting some of that money? I think that's important. So let's go down the line. Sahar, announce yourself and tell people what you're doing.
Hi, everyone. I'm Sahar Ayinehsazian. I'm one of the partners at Vicente LLP out of the Los Angeles office. My specialties really are corporate transactions, so M&A, financing, licensing agreements, just about anything that requires a contract. And I also chair our banking group at the firm.
Adam?
Hi, I'm Adam Stetner. I'm the founder and CEO of Fund Canna. We provide debt to the cannabis industry. We've underwritten about 2,200 clients and approved $250 million. This is after 20 years of lending outside of cannabis, putting out $20 billion on balance sheet.
Kevin.
Good morning, Kevin Hart, founder and CEO of GreenCheck. It's banking fit, so they had to have a fat person on stage to balance that off, so they picked me. But we're a fintech company that connects the cannabis industry to financial institutions. We have 160 different financial institutions, banks and credit unions on the platform. We have over 9,000 cannabis businesses that have come through GreenCheck Connect, the marketplace app, seeking banking, financial, and business services, and we're processing $1 billion a month from those businesses into the U.S. banking system through the connected platform.
And Ryan.
Thank you, everyone. Ryan Himmel, I'm VP and Head of Corporate Development and Strategic Partnerships for LeafLink. For those that don't know, LeafLink is the largest B2B tech wholesale platform supporting the cannabis industry. We facilitate about $5 billion in gross merchandise value. That's the value of exchange between brands and retailers across the cannabis ecosystem. We have about 50% market share and 7,000 unique customers using our platform. My background, I've been about 20 years in accounting tech and fintech, and the last 5 years in cannabis. And there's one thing that I've learned about cannabis: it's extremely complex and it's very, very hard. And those that are left standing will make a big impact on the industry. And I think everyone here is in the room, they're still standing, and so you should feel pretty good about yourself.
So Ryan, let's stay with LeafLink. I knew your founder, who in the earliest days, he saw the gap. The seed to sale platforms had not, remembered to build out what was needed for wholesale. So I think that's pretty clever. Young, sharp entrepreneur, same first name, pretty amazing guy. And got institutional funding from a pretty amazing VC in the earliest days. So talk to us about LeafLink. What are some of the things you're actually doing to support companies Talk to us then about being fit. What do you have to do to get LeafLink and to use it properly?
What Gene's alluding to is our co-founder, Ryan Smith, who founded the company with Zach Silverman back in 2016. At that point in time, we were in the Colorado market, meeting with operators, trying to understand how they were facilitating ordering. And to most of the time, they were facilitating it through Post-it notes, spreadsheets, text messages, not what a mature company would do. And so they launched a primitive, essentially e-commerce solution back in 2016 in Colorado. And we quickly had product market fit, rinse and repeat across 30 other markets. I think along the way, we knew that facilitating commerce was sort of table stakes, and to truly delight our customers, we needed to infuse some financial services and inventory management capabilities. So in 2019, we made our first foray into financial services with a true sale invoice financing product. And at that point in time, there was very limited access to liquidity and cash flow management tools. So we grew and scaled quite well with that solution. Today, we have other embedded products for financial services for our customers. And we are very much focused on how we can help our customers be more fit as it relates to banking. And so one of the things that we're heavily focused on is trying to help our customers calibrate the management of inventory to their cash flow. It's one thing to have the ability to facilitate a payment or to have access to credit. You also need to be smart with it. You also need to have the ability to manage your inventory so you're not causing bad, unhealthy behavior such as channel stuffing in the market. And so one of the things that we're very focused on over the next year plus is providing payment and banking solutions that can allow customers and the market holistically to better manage inventory. We cannot be in a situation in a year from now where we still have states where there's 3 years worth of inventory at the wholesale level. And so we plan to do our part. We'll do it ourselves organically, but we also think that there's opportunities to consolidate. There's way too many technology solutions in the space. We need to start to provide more value to a customer in a single unified experience. And so that's an area that we're very focused on. And this will help operators get more access to financial services. They'll be better fit to get banking services.
Thank you for that. Kevin, you also have really grown with customer needs as they have changed. Talk to us about GreenCheck, what you're doing to serve the need, as well as being fit. What do customers have to do and your banks have to do? Talk to us about that.
Well, one of the approaches that we took early on and, weaving it into how are you banking fit, as cannabis businesses and cannabis operators, you don't want to have to worry about what are all the rules and regulations that are necessary on the financial institution side, and the reverse is true as well. So how do you make that as easy as possible? How do you get to be fit and have your exercise routine based upon the title of the panel here? The exercise routine for a cannabis business is very, very different than the exercise routine for a financial institution. But the one thing that's common across all of them is the data and how the money moves and what that looks like. And so one of the things that we took from an approach very early on is how do you make this as easy and as frictionless as possible for both sides? That data movement, which then leads to the money movement. Both sides want to work together. They just don't want to have to be in each other's lanes and each other's exercise routines. You don't want to wait for the other person to get off the machine so you can get in there and do it. And so we segmented it, but it's always been layered. And so we took the approach, much like what Ryan's talking about here, similar but from a different angle. We look at the supply chain of commerce over the supply chain of the plant. Everybody has different data relationships, licensing requirements, operating businesses, how their money moves, how it comes in, what does their inventory levels look like. But then how do you facilitate and enable that, because every one of those transactions has money associated with it, payments, deposits, investment dollars, et cetera. And so you want to be able to operate your business effectively, but not worry about some of those things. And so that's the key premise to GreenCheck. How do you connect all that data availability and create that frictionless environment so you don't injure yourself and have problems of having to go out and get new bank accounts and everything? But then how do you radiate that out and bring other products and business services to it? When you say the table stakes, we look at deposit services. That's the fundamentals for cannabis business. And so, it's just another way of saying the same thing. Deposit accounts and deposit control and how you're going to run your business, those are available today. And that market has become competitive when you have more and more financial institutions entering the space, which is something that the cannabis industry should be taking advantage of and looking at very importantly. But again, at the end of the day, operationally, once they have those components in place, they need to know how to optimize their business. And your financial results should be the key indicator. Over inventory and channel stuffing, it's a big problem. You look at 20% of businesses are 20% over inventoried. Drop that to 10%, and that's the difference between profitability and cash flow and struggling month to month. So how do you then enable the industry utilizing the data, utilizing financial information to optimize your business performance?
So you are enabling many banks and license operators. What happens under SAFER?
What happens when?
If SAFER does come to be?
So I'm never shy about sharing my opinion. I don't think SAFER happens this year. It's vote pandering. It's political theater. Rescheduling, we'll see, but I don't think SAFER happens. It gets attached again to a bill as an earmark. But the interesting thing for SAFER, the most important thing and the impactful thing is, unlike SAFE, in the current environment, financial institutions have to opt in to serve the cannabis industry. When SAFER passes, you have to opt out. You have to say, we're not going to do this. And so financial institutions are going to have to update their policies and procedures as to how they're not going to work with the cannabis industry. And so I think it will open a lot of doors. We have 160 accounts, but I've had maybe over 1,000 no's in the past 3 years of, no, we're going to wait for SAFER to come. And then we'll see that next round of excuses of, well, we'll wait for SAFER to happen. So more people will come in, but it's not going to be the silver bullet for the industry, because the Treasury Department is never just going to let that money flow freely. Not going to happen. There'll be more rules and regulations.
What a shame, right? Sahar, when we got ready for today, you gave me a great line. You talked about money being the oil for the machine. I love that. That's so important. Talk to us about what you're doing with clients. You're at Vicente. So many cannabis clients seek Vicente because you were there when this business started. What are you doing to help clients be fit in this world?
So I think if we start with thinking about cannabis operators and cannabis-related businesses, being fit for banking to me means that you are at the pinnacle of fitness in your business. If you are fit for banking, you are compliant, your operations are running smoothly, you're reporting everything that you need to be reporting, your corporate records are in order, which means that, yes, you're fit for banking, you're also fit for a surprise visit from a regulator. You're also fit for a potential investor or a potential lender to come in and take a look at you. So I think it's really important when we think about fitness for banking as a CRB, we understand that it doesn't live in a silo. Fitness for banking really does touch so many different aspects of your business. And again, I cannot reiterate this part enough. if you are fit for banking, obviously with a bank that knows what they're doing in cannabis, you are fit for so much else in your business.
Thank you for that, Adam. So I learned much from you in prep for today. I have been openly vocal about high interest rates, but this is what I learned from you. Hey, you're there fueling growth when maybe nobody else is. And I've also learned it's not necessarily long-term debt. Talk to us about what it takes, more about FundCanna, what it takes to be fit for your kind of loan, and what's going on, and some war stories too.
Well, thank you. War stories. So first, what I'll say is fitness. We talk about banking. I want to be clear, getting a bank account, I don't want to say it's easy, but it's not necessarily difficult, provided, look, this is a difficult business, and in order to operate legally, you had to go through a lot of hurdles to get where you are as an operator, to get licensed. I think getting banked as a deposit account is easier than many, certainly in Washington, D.C., act. It's a lot easier than they act. And for that reason, I think the fitness associated with banking when we talk about lending, it's not even about profitability. This industry is so unique in the way taxation works and corporate structures are handled by operators. So for me, if I were giving feedback, FundCanna or otherwise, if I'm giving feedback, it's really about having an understanding of how the money will be used, what your margins are, how that money will be applied, and what the repayment terms look like. And always thinking about, in terms of fitness and strength, always thinking about what the loopholes are. And by that I mean, are there non-usage fees for parked capital that's not being drawn? Are there prepayment penalties when money is going to be paid back? And how might that affect your business? It's not just about qualifying for the capital. And for that, what I would say is to be fit, when you're raising equity, that's a different animal. But when you're looking at debt or being fit as a borrower, you're going to need cash flow. Debt is not a great tool for pre-revenue business. So the first element of fitness would be you need some cash flow, because it's very hard to determine how you qualify for repayment and how that repayment will impact your business if you don't have a baseline of revenue from which to calculate. And then you mentioned war stories. What I'd say is, after 20 years in lending and hundreds of thousands of clients outside of cannabis, and now 2,200 applicants within cannabis, I would say we're not long-term. We're not a long-term solution. FundCanna is not, you don't want to buy real estate and have a long duration note with a company like ours. There are lots of companies for that. But short-term solutions, inventory turnover, growth cycles, bridge capital, money that gets you to long duration financing, that's where we thrive. Clients, and it's convenient that it's up right now, but clients grow with us because they use our money to unlock the hamster wheel they're stuck on. Terms never match revenue cycles, and that's a problem. And so, or it's COD, and that's also a problem. And so using a revolving type of facility, whether from FundCanna or otherwise, is a great way to grow the business. And the way you qualify for that, again, cash flow. Cash flow is what matters, because without it, you really can't determine payback. Now, war story, I'll just give an example. Manufacturer comes to us. His problem is he has the ability to take more orders. He doesn't have the ability to fill them. And that is more common than you'd realize. With a lot of the narrative we hear in cannabis being negative, it's not all negative. There are a lot of businesses that are stuck. And the thing that unsticks them is access to money. And so he came to us with this ability to take on more orders, but an inability to buy the raw materials to fill them. And so we funded him. The first funding we gave him, and it sounds crazy, the first piece of capital we gave him was below $30,000. He wanted to test us. And with that $30,000, he placed an order and took an order. That worked, and then he came back again and again and again, and over 29 cycles, borrowed over $2 million. His top line revenue grew 500%, and this is over 2 years with us, and he approached us at another conference late last year, I won't say the name, and gave our head of sales a hug and told us that he had just sold his business. Now, those kinds of stories are amazing, but you would have to believe when I tell you, if we look across all of our applicants and everyone that's ever funded with us, the average client after funding with us inside of 10 months grew by 54%, actual statistic. And it just shows you that this industry is locked because they don't have access to capital. You unlock their ability to grow by providing liquidity with flexible terms, and the underlying businesses grow as well.
And you loaned billions before this zany industry, right?
Yeah, I did. And what I would say is traditional small business, where I put out $3.5 billion, underwrote over 1 million clients, they get declined by traditional banks at a rate of 75 to 80%. I'm talking retail, restaurants, contractors, dry cleaners, all the businesses we frequent every day. They were never illegal. They were never considered high risk. The very banks that take their money as deposit accounts do not lend to them at a rate greater than 25%. And so what I learned in 15 years of doing that and servicing all of that on balance sheet is there is perpetually a need for small and medium-sized business to be serviced outside of traditional banking. It doesn't mean that you don't need to be fit for banking or that you don't need to pay attention to compliance and regulatory matters. Of course you do. And we will only work with legal banked businesses. But there will be a perpetual need here, whether SAFER, descheduling, rescheduling, any of that happens, we will always be an underbanked industry. That's okay. We will thrive. We need these advancements, but we will thrive despite that. But it is not unlike traditional small and medium-sized business. They have been underbanked for decades.
And you don't collateralize with the license or the real estate, right? You've said more than once today, cash flow is what you want.
Yeah, correct. I am always a student, never a professor, but what I would tell you is I have studied unsecured lending for over 20 years. I am not an expert in real estate lending, so I don't pretend to be one, and I don't know what to do with your license, and I'm not licensed in cannabis. I don't know what to do with your product. So I would tell you that equity is the most expensive capital you can raise because once it's gone forever. However, with the right partner, it's incredibly valuable. And then finding the right lender for the right need is very important. So I would just say, please do your research. Google is your friend. You want to know who you're working with. You want to understand the terms with which you're working.
We're in interesting times, especially around the money. So I just learned, and I hope you did too, there is money out there, interesting ways to find it and get it. So let's go down the line. Ryan, let's go down the line with some words of wisdom for everybody about this subject.
I think it's really important that people rationalize their tools. They make sure that they're leveraging data to inform decisions. We can't be in this world where there's an oversupply of inventory. You're using capital as well as your banking and payment products efficiently. We can't be in a year where we have a state that has 3 years worth of inventory. So, hopefully people continue to follow that. or else they just won't be in business. And those that will be left standing will be the ones that will make an impact on the industry and for themselves.
Kevin.
You're in a competitive industry. Embrace it. But what I mean by that is, don't worry about what the person across the street or across the county is doing. Worry about what you're doing and how other people can actually help you. Don't be shy. Don't think you have to do this on your own. You're not going to be able to do that. There's access to financial and business services at your fingertips. You just have to be prepared to share some information with them that you may not in the competitive environment out of fear. So don't let that be your driving behavior, because you're not going to be able to advance your business.
Sahar.
I kind of want to piggyback off of what Adam and Kevin have said and just remind everyone there's no such thing as a free lunch. So if you are able to access capital, but it seems a little bit too good to be true, it probably is a little bit too good to be true. Understand the price that you are paying for the capital, and understand that you may get the infusion that you need immediately, but there are ripple effects to that. And it's really important that you understand what those ripple effects are and how you're going to be tethered to them.
And Adam.
The last thing I'll say, and I'll be brief, I see them waving us off. I don't think this industry is broken. I think the regulatory and legislative framework is broken. The operators in this industry are incredible. Nothing is ever easy, but it's unusually hard right now. And as the regulatory and legislative framework evolves, I think the cream will rise to the top. But we've looked, as I said, at over 2,000 businesses, and I'm blown away at the strength, the resilience, and the intellectual capital that this industry has.
Well said. I've been part of over 150 investments in tech and cannabis, and the only CEOs we took our wallet out for were those who knew what to do and how to do it. So join me in thanking this group, and bring your clients or people to these kinds of resources. Thank you.